Essentially, a sovereign debt and a sovereign current crisis, if that were to happen, in my opinion, it would be one of the worst possible market environments, because that is an environment where people around the world are losing faith in their governments and in the money that they transact in their local economies. And when people start to lose faith in their government, it's not just bad things in financial markets that happen, but it's bad things in social markets that happen, right? This is the environment where revolutions happen. This is the environment where new governments come to power, sometimes violently so, right? And so, a sovereign debt crisis is the other reason that it's very important is that, again, if we just trace it back 15 years, we can go much further than that, but if we just go back 15 years, you could say in the early 2000s, we had the dot-com bubble, and after that, everything kind of bubbled up to the bank balance sheets. And then in 2008 and 2009, the banks all got in trouble, and the governments bailed them out, and all the problems bubbled up to the central bank balance sheets and the government balance sheets. Well, now where do they bubble up from here? Well, there's no place to go, right? This is the end of the line. So now when all of these problems that have been papered over by governments and central banks are now sitting on the central bank balance sheets, when citizens and investors and market participants around the world start to lose faith in those governments or those monetary authorities' ability to manage the process, then they start selling those government bonds, and they get out of that currency that's issued by those governments that they no longer trust. And then those governments can no longer fund themselves. And when they can no longer fund themselves, then they can no longer provide essential services to their citizens, right? And so then the heat goes away, and the food goes away, and the streets are not cleaned. And that's when you get real societal upheavals. And so that's why it's such an important thing. And part of the reason that I've been pounding the table that this is going to take place is the amount of debt. There's like $300 trillion of debt in the world now. That doesn't even include derivatives, just like something like 300 trillion of global debt. And we have a slowing global economy. And so, these debts are just having a really hard time being serviced. And the bigger problem is that a lot of this debt is issued in US dollars. And it's not just the United States that has dollar debt, but countries and entities and individuals outside the United States have an incredible amount of US dollar debt. So when the US dollar goes up versus their local currencies, it's almost like they're going further into debt, or it's almost like their funding cost has gone up. Again, when a family goes bankrupt, it's sad, but it doesn't affect the whole country. When a company goes bankrupt, it affects, perhaps a whole town or a whole neighborhood. But when a country goes bankrupt, it affects the whole country. And then that typically has knock-on effects to the country next door and the, countries in the region. And eventually it bubbles up to the whole globe. And so I think that's where we're at now. And you can see this happening all over the world. It's happened in El Salvador, it's happened in Peru, it's happened in Ecuador, it's happened in Sri Lanka, it's happening in Chile, it's happening in Egypt, it's happening in Argentina, Turkey. It's even happening to a certain extent in Europe and Japan. So you can kind of see this everywhere now. It hasn't manifested into a full-scale crisis yet, but if you're looking, you can see the smoke is starting to rise. And I think it has a lot to do with the amount of dollar debt out there.